Hello and welcome to Trading 5 Talents. In today's video, we're going to be talking about how to make adjustments in your trade log at the end of the month. But before we begin, I just want to say I'm not a financial advisor and this is not financial advice. This content is for educational and entertainment purposes only. Any trades I mention are not trade recommendations, but either an example trade or a past trade I've made. So please don't enter into any trades you may see here. Now let's get into the video. So if you haven't yet downloaded the trade log, there's a link in the description on both the Google Sheets document that you can use for the wheel trading strategy and also a video on how that trade log is set up. But you'll notice, and I mentioned in that video on how to go through the trade log and set it up, that there is one element that you'd have to adjust. I just simply called it an adjustment that you do at the end of the month before you set your starting balance for the next month. So that's what this is. That's what we're going through here, is how to calculate that adjustment. And so if you look in the trade log, you'll see for each column month, there's going to be this adjustments row. And so this is left blank, and this is what you'll be filling in. And we're going to go through those calculations right now. So it's in the trade log dashboard, and it's used to adjust the portfolio balance for the following month. And this is needed in order to get an accurate starting balance, because the starting balance affects your profit goals for the month, and also it affects the calculations for your ROR, or your rate of return. So how do we make this adjustment calculation? Well, one of the first things you're going to do is you're going to go into your portfolio of your broker. And in this case, I'm using Robinhood. And if you want to sign up with Robinhood, I'll leave a link down in the description as well. If you sign up using that link, then you and I both get a free stock. But on the portfolio page, or the home page of Robinhood, you're going to see a list of all of your current positions. And some of them are going to be negative. Some of them are going to be positive, depending on how the position is doing at that particular time. So if it's negative, this is what is referred to as an unrealized loss. So you can see in this BlackBerry 1050 strike call that I'm selling, it's negative $25 right now. If I were to exit right now, I'd lose $25. But this is an unrealized loss. I haven't exited the position. That is, it's not realized, it's unrealized. On the other hand, you can see right below in this portfolio example, there's a workhorse $8 strike put that I'm selling two of, and you can see that it's positive $28. Now, if I were to exit now, I would profit $28, but because I'm not exiting, this is just showing the current value of this position. This is what is referred to as an unrealized gain. And I'm just abbreviating them here, UL and UG, in order to fit into the formula a little bit nicer. So the first step then is to reconcile the broker portfolio value. I'm highlighting it, or I'm coloring it in blue just so you can follow along in the formula, but I'm also going to abbreviate it BPV. So this broker portfolio value, if you are using Robinhood, right on the homepage, it's the number at the top. It's what your whole portfolio value is listed as. The second thing you need to do, or I guess the sub-step, number one, is to subtract all your unrealized gains. Okay, so anything that's positive, subtract it from your portfolio value. Then you do the opposite for your unrealized losses. You add those in. Basically, you're trying to bring all of those positions to a net neutral position. So if you're negative, then add it to your portfolio value. If you're positive, then subtract it from your portfolio value. All right, so that's the reconciliation portion. So the second step then is to subtract the trade log portfolio value from that first step. So this is highlighted in yellow, and you'll see where that plays into the formula. Third step is enter that final answer, that total, into the trade log, whether it's positive or a negative value. So the whole calculation looks like this. It's the broker portfolio value minus your unrealized gains, adding in your unrealized losses. That total now minus the trade log portfolio value. That answer should be your adjustment. So what is this trade log portfolio value? Well, this is what the trade log will automatically calculate once the month turns over. So that's why this has to be done on the last day of the month, and specifically after 8 p.m. Eastern Standard Time on the last day of the month. Now, normal trading, options trading, stock market trading, that closes at 4 p.m. Eastern Time, but there's something called the after hours session, and that closes at 8 p.m. So if you ever noticed sometimes in your, at the market close at 4 p.m., you'll notice maybe if you check it for whatever reason, 6 p.m., 7 p.m. Eastern Time, you'll notice that sometimes those values of the stocks will change, or your portfolio value might change if you're holding stocks. That's because the after hours session is still going on, and that ends at 8 p.m. So this adjustment calculation should be done after 8 p.m. Eastern on the last day of the month. Now, why do we have to include these adjustments in the trade log? Well, there are several reasons. I'm not exactly sure which one contributes the most, but one reason is that there is a cost basis miscalculation either on our part as traders or on Robinhood's part, and not that it's a miscalculation on the broker's part, but with the wheel, it's helpful to keep track of your cost basis in lots of 100 shares, whereas the broker usually calculates your cost basis on the total number of shares that you have. And that's going to be different than if you're keeping track by individual lots of 100. So if you want to know more about the cost basis and how that's calculated, I've made a cost basis calculator. I'll leave the link to the video and to that spreadsheet in the description. Another reason you might need adjustments is because there might be some missed fees that we perhaps miscalculated. So I tried to include all the fees based on Robinhood in the trade log, but I might have missed something. The third thing is there may be times where you simply forgot to record a trade. And I've had this happen in previous months where I did not add in a trade, and I'm wondering why this adjustment is so large and why there's such a difference. And it's because I went back and realized that I never put a trade in, so it never got calculated into my profit. Another reason the adjustment may be needed is because there might be formula errors in the trade log. So I tried to do my best to proofread it and make sure everything's working properly, but it's not beyond the realm of possibility that I made a mistake and I made an error. So I do apologize if you do find errors in that. Another issue might be rounding errors. Usually when you see on your confirmation for a trade, it says you've been filled at an average price of, and it's not, it only rounds out to the hundredths place. So there may be some type of rounding issue that, when it's magnified, it could have a difference between the trade log portfolio value and the broker portfolio value. So there may be other reasons why an adjustment may be needed. However, these are the most common that I think justify an adjustment. So if you have any questions about this topic or about selling options in general, just leave a comment down below and I'll answer it as quickly as possible. In the meantime, if you want to learn more about the wheel strategy and how I use it for lifestyle trading, click on the subscribe button and turn on the notifications so you can catch all the updates. Until next time, trade wisely and take care.